This afternoon, I'm going to start with Facebook because it's the one up more than 5% today. Obviously, Pinterest results are a big reason. Is Pinterest winning at the expense of Facebook, though?
I don't believe so. And I think you also saw Snap report last week, and Snap was also up about 30% on a pretty incredible print. So I think what's happening is, one, expectations were ratcheted down, and we're going into a quarter where generally forecasts and estimates have been muted by just the fear of COVID, right? We didn't see that as much on the e-commerce side. If anything, COVID has helped. On the advertiser side, it's the other way. So I think one is expectations have relatively been in check, and so as Snap showed, and as Snap and Pinterest are showing that the curve of the recovery or the slope of the recovery is a lot steeper and certainly benefiting the likes of Facebook. It'll also benefit Google or Alphabet, and we've done a whole bunch of channel checks intra-quarter, and advertisers and agencies seem to all be effectively in agreement that March was the low, and then we saw a gradual improvement month to month to month, and even in some cases, week to week to week.
Yeah. It's interesting you say that because obviously Facebook and Google are the two big online ad platforms, so you'd think their fortunes would kind of rise and fall together. But Alphabet has this way of being somewhat of a wet blanket on earnings. Often the expense line is a concern. There's a little less clarity because of maybe the structure of the company. Do you think they can shake that off this time around?
Well, remember, Google, in the big scheme of things, is an older company. They've been in business for about 25 years. Facebook is younger. And so therefore, the growth of Google has come down relative to where Facebook is growing. So outperformance tends to also follow that. You also have the big issue of the antitrust talks going on right now, and the fact that Google really is in the, kind of the sweet spot of where the regulators are looking. And whether they ultimately end up breaking it or not, we subscribe to a school of thought that doesn't believe that. We think they're more likely to just be forced to change some of the ways they do business, but that has kept valuation somewhat in check.
So Yusuf, finally, just because I haven't mentioned it yet, on Amazon's side, here we have a lot of different business lines. There's the cloud read-through from what we've heard from Microsoft, to some extent, any lingering concerns from what we heard from SAP. You've got the retail side. There's a lot of different things to look at here. What's most important this afternoon?
So for Amazon, the bar is really high. At their size, we're expecting, I think consensus is around 32, 33% top line growth. For Facebook and Google, you're talking about 10% or so. So we're definitely looking at that, whether they're going to be able to cross that threshold. And I suspect they will, but at what cost, right? The company has been very aggressively hiring. They've been aggressively investing in cloud, et cetera. So I would say looking at the operating margin, EBITDA margin is really important for them. One thing that they have going for them, which will not impact Q3, but will be a really nice tailwind into Q4, is the fact that Prime Day has been pushed into Q4, happened a couple of weeks ago or 3 weeks ago, and it was, gangbusters. So we think that they're going to rely on that to also help with the, probably guiding pretty decent to a pretty decent Q4.
Yeah, we saw in the Chase card data that event alone almost pushed retail spending back up to year-ago levels, and it has young people's spending way above those thresholds. Yusuf, thanks for joining us. It'll be an interesting afternoon.
Shepard Smith here. Thanks for watching CNBC on YouTube.